ECN Trade Technical Webinar. Good morning, my name is Rob Clayton. Well, the Australian dollar took a heavy blow to the upside in the middle of the week after Tuesday's attempt to rally. Ended up clearly rejecting that 77.20.50 region and nosedives to a low of 76.34 and posts an outside range day. From the bearish outside range day, further follow on Friday was seen with a 120 point fall in the Australian dollar and now closes underneath the support of 75.45. In light of the price action over the last couple of days from Wednesday to Friday, further bearishness is seen, and with the close under 75.45 now seals the fate towards 74.05.15. On the day, I expect to see a range of 74.80 to 75.80 to 85, and any challenges towards the top side again should be limited, and until we see the price action fall towards 74.05.15. Also to note, for those who look out for 100-day moving averages, it now comes in around 74.80, which is where the first support comes in on the day. Well, the euro, after staging a firm rally on Monday, Tuesday, rejects that region above 113, and from the decline from the highs around 113.26, the market has fallen heavily and breaks beneath the support of 112.10, with the dollar index recovering from a near 2-week, or rebounding from a 2-week low. Now looks for the euro to fall further, with the immediate target coming in at 111.90, with 111.45.50 to 110.50 as an objective. And it is towards that downside that could actually eventually see that awaited challenge of 109.50.75. Towards the top side, resistance comes in at 112.60.80, and as above there is that congestion area seen around about 113. Figure 65. Well, dollar yen, if we look at the 4-hour graph, a great rebound, or an impressive rebound from that 101.25, with the balls coming back in, breaks through that level of 102.70 and hits a high around 103.04 to 06. Although we are currently witnessing small weakness towards the Monday open, it is viewed that from 101.90 the market will rebound and eventually reclaim the highs of around about 103.50 to 104 figure 25, or 104.10.25. Reassess from there, as the market could actually go higher and move on through the 100-day moving average, which is around about 104.85, and then head towards 106 as a potential target. With all that bullish talk is the fact that if we see a move back under 101.25, then this would negate any upside potential and look back towards 99.40 to 99.60. But unlikely at this stage, while the market seems quite content in staying above this region and the bullish formation here, and also with the US dollar rebounding of those near 2-week lows, should give further faith towards the upside. Sterling. Well, last week we saw a rise up towards 134.50.60 resistance, and then topping out from there and now in a downtrend. Currently holding underneath the short-term trend of 133.15.30. I expect to see further weakness with the move now that we are beneath 132.80. Is the next target comes in at 132.10.15. Now, do note underneath 132.10.15 reopens the downside and looks towards the target around about 130.20 to 25. In light of this downtrend, if we do see a break above 133.15.30, then the next resistance comes in at 133.80. But the current move holds towards the downside is the fact that I expect to see this support give away and then eventually move lower. Gold, well, after staging a very impressive rally from the bullish foundations of 1300, the market has now topped out from 1352, and with the current decline is breaking through supports, and the last one was at 1330 to now confirm the move down towards 1320. It is viewed beneath 20, exposes the bullish foundations holding around 13 figure 08, 09, and a break beneath that level would expose further weakness and see a drop towards 1,250. For those who monitor moving averages, the 100-day moving average now comes in exactly on that level at 1,300. So interesting to see that we have a 100-day moving average there as well as a pivotal point there. So a very important level to watch. And if we do see a break, $50 should see the move to $12.50. And wrapping up with oil. Well, the rejection from $48.20. You can see here now looks further light to the downside after breaking through the support of 46.5. Initially, I've seen the support holding around the low 43s. However, finding the hold there would look back towards 41.60 to 70. And in light of the initial strength coming through here and giving it all back in near enough one day, does give further concerns that we might see a weaker oil for the start of the week. Well, that comes to the end of my conclusion that the markets across the board will see a firmer US dollar, and I expect to see most of those targets reached later on in the week. Thank you very much for your attention, and I hope you enjoyed the day ahead.